Yo, welcome to yet another video. Today I'm going to be explaining my outlook for the next week. So let's get right into it. I'd like to start on the monthly here. As you can see, we formed SMT with the previous month's high and had a closure. And YM here actually left a gap at previous month's low, which you already know is highly likely to get traded into before continuing higher. So that's one reason to be bearish. The second one is on NQ here. We got a sequence. First of all, we have this pump, and I would say this is pretty irrelevant because ES did not break this S&T level, right? NQ traded a long time into it, failed to manipulate it, and ES is still leaving failure swing off the lows. So I'm viewing this as a retracement, also because the lack of a S&T sequence, right? There's absolutely no S&T at this swing point. Um, and also you left previous day's low with a daily devil's mark on Thursday. So I'm viewing this as a retracement signature. And one more confluence is also if we take EQ of the current yearly candle, we can see that we didn't hit it and we stopped right above it. So yeah, I'm viewing this whole move as a retracement, even though phase of price wise we did expand. We hit the V shape. The sequence that we got is why I'm leaning bearish. So if we take a look at NQ here, there's this high. It's a relevant high. It's Tuesday's high. It traded into it a long time ago. And ES at this moment was lagging. There was S&T here. But then after ES caught up to NQ, we broke SMT and hit this relevant level that I mentioned I wanted in a previous recap. We printed a sequence, and that sequence is on the daily. So SMT break into a strength switch PSP. Why is this a strength switch PSP? Because NQ broke the S&T a long time ago, and so it was previously more bullish. But then after we broke the SMT, even though that we left this current high of the week, we printed a bearish closure. So it's switch strength. Same goes with YM. This pretty relevant high here got SMT'd, and we printed a strength switch PSP. So when we drop down to the lower time frame, we want to confirm this via phase of price. And as we see, we took every single high. There's no failure swings. Printed a nice closure. NQ is already starting to reverse lower since it's now the weakest asset. And if we drop down even lower, for example, to like the 5 minute, we can see that this reversal signature is actually really relevant because you have this very nice V shape into a consolidation into another expansion. Same thing on all pairs. So we know we can trust this. So my framework for next week is going to be dependent on how the week opens up. So ideally, the week would open up, for example, print a new hourly candle so that here we would have a gap and it would open high into it, get in like an S&T sequence or anything and just expand away from it. If it opens low, then that's a lower probability and I'm going to be navigating price with more caution. Let's just say that. But yeah, it brings me to mentioning this very important key level. This is actually the refined key level for longs for the next week because it is the only relevant low in close proximity to price, and it's actually like below the 6-hour gap. So technically the refined key level is this, but it's extremely important what we do at this low. As you can see, I already wrote this out like 2 days ago. If we fail to manipulate it, then we will have new lows and my overall bearish narrative will play out. So if we open high, trade into a gap, expand into this level, not deliver slowly, because when you're expanding into a key level, that means the key level itself is probably a draw on liquidity, right? If it's a key level, then you'd want to see us deliver slowly to that key level, engineering highs and whatnot. If we expand aggressively into this level and fail to manipulate it, we don't get an SMT sequence on any pairs, and we just get a fail to manipulate signature, for example, like a consolidation or a retracement, then I'm going to be very bearish. And I'm going to be pretty confident that this low is going to get hit for next week. So essentially, that is my entire framework. I just blended some higher time frame logic with our current model, which is this SMT break for reversal. I just don't like us leaving this daily devil's mark. 99% of the time is a retracement signature. With the overall bearish context, right now the profile and the model supports it as we're printing the sequence inside of this NWOG. So as mentioned before, I'd like to see any form of SMT fill here. Is there a 90-minute gap here? No, there isn't. Yeah, it just doesn't matter. It's probably going to be on the hourly or even 90-minute. If we print like a down close here, then we trade into it, things of that nature. But yeah, when I blend everything together, it's leading me towards one thing, new lows. Until ES breaks this overall SMT here.